Is it just a correction, or is the market starting to crash? I don't know, but what I do know is a lot of my favorite stocks are on sale right now. And I know a lot of my favorite stocks, they are starting to tumble. They are under pressure. A lot of the stocks that I enjoy for dividends, for cash flow, they are finally starting to be on sale. And there are opportunities out there for long-term dividend investors to start averaging in and possibly averaging down over time to accumulate shares at progressively lower prices. And so I am a huge fan of dollar cost averaging. I buy stocks each and every month, and I do this for a reason. I do this to mitigate risk. I do this to stay in the game so that I'm always buying. I'm always getting closer towards my goal of financial freedom, because each time I buy shares, my passive income from dividends, it notches up to the next level. But certainly one of my favorite reasons to dollar cost average is to mitigate risk and to try and optimize my overall buy price on my stocks. And so I want to share today several of my dollar cost averaging strategies. By the way, you may be asking, what is dollar cost averaging? This is literally the process of investing money each and every month over periodic investments versus taking a lump sum and putting it all in the stock market at once. So I'm going to go through my strategy today. I'm going to go through several different ways that I dollar cost average, how I partition my dollar cost averaging, and I'm going to talk too about cash management, because in a declining market, one of the most important things for dividend investors, in my humble opinion, is to exercise patience in their cash management. And this is something personally that I have to remind myself about all the time. So let's get started. Hey everyone, so let's jump right into it today. Dollar cost averaging. So first and foremost, one of the things I love about being a dividend investor, I own 39 stocks, is I receive dividend payouts throughout the year. And those dividends, typically, it's a rising stream of passive income over time, because most of the companies that I own, they raise their dividends yearly. Moreover, because I'm adding more capital to my stock portfolio over time, the stream of dividend income is always increasing. And so what I have here is a chart. This is really my stream of dividends. It's progressively rising over time. And so what I do is, as soon as I receive a dividend, because I am not using my dividends yet to pay for my bills, I reinvest it. And 99% of the time these days, I reinvest it back into the stock that paid that dividend. Sometimes I'll selectively choose not to reinvest, but most of the time these days I am reinvesting back into the stock that paid the dividend. Now I'll link in the description below. I did a video about my dividend reinvestment strategy. It has kind of morphed over time, and for a while I was not reinvesting all of my dividends back into the stock that paid the dividend. But these days, most of my stocks, they're at reasonable levels. I feel comfortable reinvesting back into the stock that paid the dividend. And so what happens here is, by being a dividend investor, I love this because the dividends themselves, the reinvestment, that is one form of dollar cost averaging. And so you can see over time here, this is time. I'm taking this growing stream of dividends, and in real time, as I receive the dividends, they go back into the stock. So I'm buying shares, buying shares, buying shares, and it's progressively a higher stream that's buying more shares. And so first strategy for me for dollar cost averaging is the most simple one, the most elegant one, the one that really personifies why I love dividend investing, is I have this built-in dollar cost averaging in my investing philosophy, because I'm not tapping into the dividends yet. I'm not using them yet to pay bills. So I'm able to use them to dollar cost average over time. Put another way, the reason I like dollar cost averaging so much is its time diversification. No one knows when the market's going to hit its peak. No one knows when the market's going to hit its bottom. I like to diversify over time. And by reinvesting over time as the dividends come in, I'm always experiencing this element of time diversification in my portfolio. So strategy 2 is my monthly buy orders. There are certain stocks that I own that are not to the size they need to be yet. There are certain stocks where I am just actively building them, It's really important for me strategically to get them up to size. And I'll tell you, there's really, I would say right now, 2 stocks that I'm focused on in this light. One of them is General Mills, ticker symbol GIS. I need to get it to be a bigger percentage of the portfolio because it's roughly about 0.6% right now of the total portfolio. I want to get it up to about 1%, 0.9% to 1%. That's kind of the minimum where I want a stock to be in the portfolio. And so General Mills is a little light now, and in my opinion, it's a good value right now. So I'm adding more General Mills monthly. Each and every month, like clockwork, I'm adding more money to General Mills. The other stock that I'm adding to monthly right now is United Technologies. It is very, ticker UTX, it's very strategic for me to build this position. It's my number 4 favorite stock of all time. I'll link in the description below to a video I've done about this stock, actually to 2 videos, and it's underrepresented in my portfolio given that it's my number 4 favorite stock. And so it's strategic for me just to continue to add to this thing monthly to bring it to size. Usually with my monthly buy orders, I kind of cap them at a level that is reasonable for me. I have no problem funding those purchases monthly, and like clockwork, I just keep buying every month. And so you'll see with my monthly buy orders that when I do make the orders, it's always the same size. Now, I will tell you, things come up in life. Sometimes there may be a month where I have to pause my buy orders. Maybe an extra expense came in. I have 2 young children. I live in the expensive San Francisco Bay Area. If there is a month where I cannot do my monthly buy order, I cannot complete my monthly buy order to bring these stocks to size, I will pause it for that month, like I did here, for example, and I will bring it back the next month. I don't try to make up for it when I come back the next month. I try to be realistic with my cash management. I just want to bring it back and keep going. And if I have to miss it again, I miss it again, and then I keep going. But I'll tell you here, this is just for illustrative purposes. Most of the time, I just make these like clockwork because I'm literally only buying 2 stocks right now on a monthly basis, and so I am capping my monthly investments on bucket 2 at a reasonable level where typically I do not miss a month. But anyways, if I had to miss a month, I would just miss it and bring it back the next month, but I would not try to make it up. Now, the next strategy number 3, is monthly surplus cash and bonuses. So some months I may have a little bit extra cash to deploy. Some months my income, quite frankly, can be lumpy. I may receive a bonus. I may receive a one-time payout. I may just have more cash in a certain month than others. And so as this cash rolls in over time, what I'll do is I will deploy it into the stock market. And it can be all over the map. It can be different levels each month. Some months it may be 0. Some months it may be quite a bit more. So you can see here, like this month, I had a bunch of money to average in. This month, none. This month, a small amount, really big amount, so on and so forth. And so in this particular scenario, this one's a little bit different. First one, I'm just reinvesting back into the stock that paid the dividend. This one, I'm literally focusing on strategic stocks that I need to bring to size. This bucket, I look at my entire 39 stocks. I look in which ones are on sale now, which ones are strategic for you, which ones are you really focused on. And I'll tell you, in 2019, I'm going to be really focused on my top 10. And so I look at it, and then if I have opportunities, I will buy, and I have the excess cash, I will buy the stock that month. I will dollar cost average. And I realize I'm realistic with myself. Some months I may have no cash. Some months I may have a little extra cash. Maybe I was able to do a little bit of a side hustle, bring in a little extra cash. Some months I may have a lot of extra cash because maybe I got my bonus. Maybe I got a one-time payout that was huge, and I can deploy that cash into the stock market that month and really enjoy it, and then in future months have nothing to deploy. And so this is an interesting bucket. I'll tell you, these are really the 3 ways that I am personally dollar cost averaging now. Now, I have the liberty that I have an established portfolio. I have been investing for a long time. I already have a track record spanning back many years, and so it's easy for me because I already have a base. And so the money that's coming in is just incremental to the base I already have, and quite frankly, the money I'm adding to the portfolio these days it's a smaller percentage as compared to what's already been deployed. But I want to take a hypothetical scenario. I know a lot of you out there are building net new portfolios from the ground up. You're starting out. You're new to dividend investing. And I get this question all the time. Ian, hypothetically, if you were brand new, how would you dollar cost average? How would you look at this? And I like this question because right now, maybe I'm wrong, but in my opinion, this market is headed for more turbulence. We are going to see more opportunities, and it's going to be a little bit scary because it is never fun to see a stock that you buy go down over time, because it is it hits the ego when on paper the capital appreciation is going downhill. One is quote unquote losing money. It is also exciting, however, to see as stock prices go down, starting yields are higher, and if one invests for dividends, not capital appreciation, the higher starting yields are really compelling because it helps all of us reach financial freedom quicker. Anyways, hypothetically, if I were just starting out again, and let's say I was starting out with a lump sum, because a lot of people come to me with this question, Ian, got all this money, I've been saving all these years, I want to start out. And so I'm going to look at this one hypothetically if this were me. Let's say I've saved up a nest egg, I've got a bunch of cash, I want to get started right now, 2018, headed into 2019 with dividend investing. What I would do here is strategy number 4, scenario number 4. I would look, how much do I have to invest? The bigger it is, the more I'm going to invest, the more years I will spread it out. If it's a smaller amount, maybe I'll spread it out over the course of 1 year or 1.5 years. If it's a really large amount, I may spread it out over 4 years. It's really going to be subjective to each individual person, each individual situation. But for myself, I will just look, how much do I have to invest? How much is in my lump sum? And I will partition it out. I will come up with a calendar. I will literally make a contract with myself. Ian, I promise myself I will only invest this much each month. And then I will literally take that money I have each month and deploy it over a diversified portfolio of dividend-paying stocks. It'll probably look somewhat like scenario 3. Now, what I would probably do in this last scenario, quite frankly, is I would look each month what stocks are the best values, which ones are on sale the most. And I would probably skew a little bit towards those stocks. That being said, hypothetically, if I were just starting over again, I would probably also look holistically, which stocks do I need in my portfolio? And even if they're not at a perfect entry price right now, it's probably good to start at least getting my foot in the door with those particular stocks. But what you see here is I literally have a straight line over the course, quite frankly, of 4 years. And I'm assuming here, look, I've saved up a nest egg. I don't want to put it all in at once because that is risky from a time diversification standpoint. What if the market keeps going down? That means I would have missed out on all of those awesome opportunities to average down, to buy lower, to get better value on my money. So these are my 4 scenarios, and I really want to close out here with an important point. By the way, I am on Patreon right now. This is a platform where members of this community, I bring my best content forth here on YouTube for everyone to enjoy. But certain members of the community have asked, hey Ian, how can I contribute? How can I give back financially? Well, there's a way now on Patreon. And for certain members on Patreon, or actually I would say all members on Patreon, there is certain value that I'm bringing forth there on Patreon, some really cool bonuses and extras as well. So check that out if you're interested. I'll link in the description below. But what I have done is I have shared a challenge with my patrons recently that I am personally focused on right now, that I am facing right now. And the challenge goes like this. You probably noticed I just did a video on Johnson & Johnson, my #1 favorite stock of all time. I'll link in the description below. Stock has tanked, and it has created a buying opportunity. I even said in the video, if it reaches the 120s, I want to buy some shares. Well, lo and behold, it reached the 120s. I logged into my account. I was ready to place a buy order the other day, but then I was like, you know what, Ian? You know what? No, you're not doing it. You're not doing it, because to make that buy order, I would have had to get ahead of myself. I would have had to borrow cash from my emergency fund that was not earmarked for investing. And this is what's so tempting, so difficult for dividend investors in a downward market. In a downward market, these deals, they will appear And sometimes it will be enticing. One will be enticed to go ahead and buy more and more stocks, potentially more stocks than one really should be buying. And so the number one lesson I need to reinforce with myself is, and I'm so proud that I had the discipline not to buy Johnson & Johnson. If I do, I'll buy it in January. I will buy it when the time is right, when the cash is right. But right now I've already made a lot of buy orders in December, and I have to be very picky throughout the rest of the month with any other buy orders I make. I have to be very picky because I don't want to get ahead of myself. I don't want to break my rules. I don't want to borrow from my cash reserves. And so the word of caution to everyone out there is even this experienced investor faces this challenge. I did a video about it. I'll link in the description below. The video is titled something like, I cannot stop buying dividend stocks. And buying dividend stocks, it is a really positive event because one sees the cash coming in right away. And I was tempted the other day. I just wanted to buy J&J, but I had to stop myself. I had to stop myself because it was not prudent cash management. And the key to all of this, whether it's a tumbling stock market or not, is to practice prudent cash management, to realize, look, the deals will probably still be there next month or 2 months out or 3 months out. Wait for the cash. Don't get ahead of yourself. And in fact, what I have started doing to make things even easier on myself, less tempting, is I've been paying down. I never have credit card debt, but what I do is I use credit cards a lot because I like getting the points. And I used to just pay off these credit cards when the statement comes in, pay it off monthly. But sometimes these bills can get kind of high, and I always have the cash in my account to pay for them. But sometimes it's kind of tempting to. I look in my account, my everyday account, and I'm like, okay, I got all this cash. I could use just a little of that to buy dividend stocks. So the key for me is to be realistic about my expenses and also just to get money out of my account as quickly as possible. So what I started doing is I started paying down my credit cards pretty much weekly now. Whenever I make a larger purchase on the credit cards, I will go into that account, transfer the money right away. So it's out of my everyday account, paying off the card, and the money I have in my everyday account, it goes down. It's more realistic. It's more representative. That's just one example of the type of tool that helps me be prudent with my cash management. Another one, and a strategic goal of mine in 2018, and it will continue to be in 2019, is building an emergency fund. I did it this year. I have a very small emergency fund, but I'm so proud of it. And the way I built this is literally, as soon as cash is coming in, it goes into a different account. It goes into a different account for my emergency fund. And so again, when money comes in, paycheck comes in, my everyday account, get it out of that account. Just get it out into the emergency fund as quickly as possible, because I know my everyday account, that's what I'm going to tap into for the monthly buy orders. That's what I'm going to tap into for some of these surplus cash and bonus lumpy type income that's coming in. So that account needs to be representative of what I really have to invest. And if I can get the emergency fund out, I can get the credit cards paid, get the money out as quickly as possible. That really benefits me from a budgeting, from a cash management standpoint. And it is so tempting to think, this is a deal, I need to take advantage of it now, or else next month J&J is going to be back up at really high levels where I don't want to buy it. You know, that is the risk that I run. But what I have always found, or typically found, is look, the deal will probably still be there tomorrow, and it may even be a better deal. And look, if that deal is not there tomorrow on J&J, you know what? It's going to be something else. I own 39 stocks. I'll probably be adding another one at some point. I want to buy another stock, and this point, I'm kind of thinking it'd probably be an insurance company. We'll see, but I have a large portfolio of stocks. If J&J is not on sale next month when I have more cash to invest, look, I'll buy something else that is on sale. And so this is what it's all about. This is my dollar cost averaging strategy. This stuff is so fundamental to the dividend philosophy because it mitigates risk, it optimizes buy price, and quite frankly, it keeps the head in the game. Every month, I am buying stocks and I'm getting closer to my goal. The only downside of this kind of thing is the cash management, and not to get too overwhelmed with buying too many positions, deploying too much cash at once. So I'd be curious, what do you guys think? Do you have a dollar cost averaging strategy? Do you like to dollar cost average? Do you prefer just to build up cash and wait? I'll tell you, I don't like building up cash because sometimes, quite frankly, I'm tempted to spend it on something else. Maybe I've got a bunch of cash building up and I'm like, hey, I want to spend it on a home improvement project, or hey, I want to buy something. And so that's another reason behind all this that I like to dollar cost averaging, is it's kind of like once the credit card bills are paid, once the emergency fund is built up, once expenses are paid, this is just another way to get money, quite frankly, out of my everyday account that I might squander on something else. It gets the money out. It just has to happen in that priority order for proper cash management. I'd be so curious what you all think about this strategy. Hey, thank you for watching the video today. Before I leave, by the way, in terms of full disclosure, I own the stocks mentioned today. First and foremost, I own 3M, the makers of this beautiful Post-it board, ticker symbol MMM. I also own stock in General Mills, ticker symbol GIS. I own stock in Johnson & Johnson, ticker symbol JNJ. I am long on those stocks. I am also long, I own stock in United Technologies, ticker symbol UTX. Also, before I leave today, a friendly disclaimer. Today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. Hey, before I leave today, I've been wondering, should I share this? Should I not share this? I'm just going to put it out there. I am so blessed with this community, with the support, with the comments, questions, likes, everything. Thank you all. And I am so overwhelmed and blessed with the people who have chosen to support this channel on Patreon. Look, I put a lot of time into these videos, and that is probably the biggest expense of this channel. I love this channel. I am going to continue to put my best foot forward, my best content forward for free here on YouTube. And it's these patrons who are helping to make this a reality because they are supporting this channel. And look, if you are a patron who is contributing at the $25 level, you're seeing all my stock trades, I have a gift for you. I am going to share with you within the next 2 weeks here, let's call it a Christmas gift. I'm going to share my complete stock portfolio. I'm going to share all of the positions and the percentage allocation to each position. So get ready for that. And then for the community at large, I am going to be sharing this stock portfolio as previously promised at 25,000 subscribers. Originally I was thinking 100,000, but it's probably going to take a bit too long to reach 100,000, and the time has come. I want to share it all in one place with everyone. So if you're not a patron, that is okay. Do not worry about it. There are so many ways you can support this channel, and a simple like really means the world to me. And so everyone is going to see my stock portfolio at 25,000 subscribers. You're going to see all the positions, all 39. You're going to see my percentage allocation to each position. But my patrons, those at the $25 level who are really making a bold statement, a bold, generous statement here, putting their best foot forward to support this channel, for everyone out there, it means the world to me, and that is going to be my Christmas gift to you guys. And so I know one of you was asking, you were asking about this. I'm just going to do it, so stay tuned. Hey everyone, thank you so much. I will see you in the next dividend investing video.